You too, what's up, man? It's your boy Richardson from Minimum Wage to Millionaire. If you're new here, welcome. If you've been here, welcome back. Let's get straight to it. Investing is the key to building wealth. I would even go a step further and say that if you're not investing, then you're not truly building wealth. Now, what is investing, Richardson? Investing is you purchasing or you buying an asset. It could be stocks, real estate, even like more speculative like crypto and all that, with the expectation to either receive income out of it, like dividend payments or interest, and or for the asset to actually appreciate in value. Now, the reason why we invest is two reasons. One is that we are battling against time, right? There's only so much time, there's only so much part of our lives where we could give to work before we no longer could work, right? We're not made to work forever, at least now that, we're made in sin and all that. We're not made to work forever. There's going to be a point in time where we're going to be too old, too frail to work. But what happens is that we still have financial needs. So if your idea of, let me just work for all my money, that sounds well when you're in your younger years, but when you're at that point where you no longer could trade your time for work because your body just can't handle it, your mind can't handle it, what happens then? You're essentially nothing. Investing will help, or is the answer to people in that situation. That's why the whole idea of retirement and all that comes into play. You invest in your retirement so that when you stop working and you're no longer trading your time for money, you're able to have some money coming in from your investments and letting that work for you. The second thing is this little known thing called inflation, which is a robber of wealth. Inflation is the devaluation of our currency. So notice how a dollar 10 years ago can't buy the same thing a dollar could today. Dollar 10, 15, 20 years ago, you could get, a little cheeseburger. You probably could get a little fries, and maybe if you cough up a couple more coins, you could probably get a drink. So you could get a whole meal for like $2 and some change, $3 and some change, like a little meal. Now $3 is for the cheeseburger itself. You ever really wonder why that's the case? Well, there's plenty of reasons, but it really is the devaluation of our currency through excessive money printing. So as the Federal Reserve, which is a separate entity from the federal government, as they continue to print more money, right, the valuation of all the other dollars goes down. And when the valuation of the dollars goes less, it buys less of those goods. So now you need more of the devalued money to buy the same amount of goods, if that makes any sense. And if you guys want me, I could do a separate video talking more about inflation and that and why we have inflation. But those are the two reasons why we should invest. So you may ask Richardson, what are the key important things when you start getting into investing? Well, I would argue the two most important rules is one is that don't ever invest until you've got your fundamentals down. Meaning, you know what you want to invest in, you know what you expect for your investing goals. What is your investment term? Are you investing for a shorter period of time, which may require more risky investments to get something out of it? Or are you investing for 30, 40 years where you could play the waiting game and allow time to be your benefit? Also, what is your strategy? Be realistic, right? Don't just like, I'm going to invest in this, that, because if your whole mindset is just follow the herd, well, you're going to be lacking behind the herd, right? So you have to think out ahead. What do you want? And in other words, just cultivate an investment strategy that works best for you and your loved ones. Because how a 50-year-old is going to invest is going to be a lot different from how a 20-year-old is going to be invest, which is going to be a lot different from somebody who's already retired in their 70s and how they invest, right? Everyone has a different investing thing. So before you put a single dollar into it, don't just watch a financial YouTuber like myself or anyone like that and just be like, okay, I'm willing to dive into all this. Actually think it through. Find out what you want from your money. And then once you have that plan, then you execute. And two is that this is something that's always being said, but investment always comes with risk. Do never believe anyone that says, hey, invest in me, it's a 100% guaranteed return. Run away. All right. That person is either a grifter, that person is an unhonest or inhonest or just a false salesman, or I like to relay everything spiritual that person's the devil in flesh. All right, don't ever listen to anyone that says it is a 100% guaranteed return when it comes to investment, because nothing is. Nothing. There's very few things in life is 100% guaranteed, period, right? So don't ever listen or buy into that. So be prepared when you're investing that you're going to take a risk on that money, and there is a chance that you put up the principal, which is the actual money, the value of the money you put in, that you may not get it back. And you have to be okay with that. You have to be okay with it. Now, depending on what assets you get into, it could reduce the amount of risk of you losing your principal. That's for sure. But just have that mindset going in, right? Don't be like a gambler that doesn't really know that they're risking so much money because they're so engulfed with the idea of making more money that they end up getting wiped out and losing all. And anyone that knows any gambler or someone that has a gambling addiction, you know how devastating it is, not only to themselves, but to their family, right? So just put that mindset in. I'm investing, be prepared to lose that money. So think of things like having an emergency fund. Think of things about being debt-free, which I'm doing right now. Well, I'm already debt-free, but I'm building up my emergency fund. Think about all those things. Research each of those asset classes, like stocks, which is essentially ownership in the company based by shares. So if you own a share of Apple, you technically own Apple. Now, Apple has tens, if not millions of shares, so you own a very small piece, but you own a share of Apple, so you're entitled to the profits that they make as a shareholder, right? Apple has a fiduciary duty to make sure that the profits go to you, right? Anything they do, their moves they make, goes to profits. And think about it, when you always hear, oh, these corporations only care about shareholders, well, there's truth to that because they have a fiduciary duty to care about the shareholders above everyone else. Whether you think it's fair or not, I mean, I'm not here to tell you. The rules were already made before I was even conceived in my mother's womb, so I'm just here to play like everyone else. So there's that. Then there's bonds, which is pretty much you buying up debt of either government, municipalities, or corporations. And in this case, you are the owner of the debt, so you are the lender. And in exchange of you giving up their capital or your money, you receive monthly interest payments. And then once the term of the bond expires, you get the principal back. So this is what's regarded to known as a safer investment, because although there's no guarantee, again, no 100% guarantee, but because you're dealing with governments and big corporations that have, more capital, more money on the books, more cash, they're less likely to default, and they're more likely to get your interest plus your principal payments back, right? More likely, not guaranteed, but more than likely. Then you have more in between investments like real estate, which is more variety than the previous investments, because you can make money on both the appreciation of the property, but what many people do in real estate is that they then get tenants to come rent the unit. So now they're making money on the rental income, or the interest that they're getting, the monthly income from your rent, and they're making money on the value of the property. So they actually win two ways in that regard, at least if that's how you want to play with real estate. Real estate gets crazy. And again, in future videos, if you guys want me to talk about it, I'll be more than happy to talk about it. So yeah, that's really it. I don't want this video to be too long. I just kind of want to give you the fundamentals about investing and why I think investing not only is the key, but investing is required. Now, if you guys want, in future videos, I'll talk about the different type of asset classes and what I particularly invest in, which is really one really main investment. But before I do that, I want to kind of bookend and want to tell you guys about more alternative investments. So we talk about stocks, we talk about real estate, we talk about, you can even invest in crypto and all that stuff. I'm not too knowledgeable about crypto. That's why I didn't go really deep into that crypto, because I'm still figuring out about what's up with crypto. But the more important investment as well is to invest in yourself, right? Notice how not last video, but the video before that, when I was talking about being a 27-year-old man with no career, sometimes it may be more important, especially if you're lower income like myself, to, before you invest in the stock market or invest in the real estate market or invest in crypto, whatever, it may be more beneficial for you to invest in your education, right? Learning more about money, right? Even watching this video may be you investing your investigation. Instead of you investing with your money, you're investing with your time, right? It could be stuff like going to trade school, college, or taking courses, or let's say you're already in your career and you invest in like additional certifications so that now you are more valuable in the workforce, and that heeds you a larger salary increase, which then could lead you to more economic opportunities. So sometimes investing doesn't have to be, okay, which stock is going to give me the larger ROI, which is return on investment, which is what investments you should look into to see how much return are you getting on your investment, ROI, your interest rate, or whatever. Sometimes it's more important or more valuable to you to invest your time and your money into building up valuable skill sets and then leveraging that, and then that gets you a higher salary. Let's say if I'm making, for example, if I'm making $40,000 a year and I get into trade, or I go into cosmetology, or some of you guys in that video made a lot of great recommendations and comments for me. I appreciate that. But let's say I invest in one of those things and now my salary go from 40,000 to 120,000. Well, I just 3x'd my money, right? There's very few investments out there that are going to 3x your money in a few years, at least without taking a dangerous amount of risk. So see, sometimes investing in yourself may be the more valuable thing, and treat yourself like an asset. Treat yourself, and take care of yourself, right? Take care of your mental health, take care of your overall health. I'm doing my challenge. Had a lot of downsides with the challenge, but I'm still going through the finish line. I'm huffing through the finish line. So just check all those boxes and just really think things through before you put money into investment, and why investing is very, very valuable. So I don't want this video to be too long. Hopefully you guys got something out of it. May the Lord be with you guys all today. Thank you, ladies and gentlemen. It's Richardson from Minimum Wage to Millionaire, signing out.